Over the weekend at the Atlantic Council Global Energy Forum, I had the chance to catch up with senior leaders, policymakers as well. I got the chance to catch up with the #1 man on Iran for the U.S. State Department, Brian Hook, and I asked him to really walk us through what's going to happen next with regards to the waivers when it comes to Iran. Listen in.
We did not want to lift the price of oil, and we were successful doing that. So when the president left the deal, it was trading at 74. When our sanctions went back into effect, and we had taken off 1 million barrels of Iranian crude, oil was at 72. So we had very carefully calibrated the balancing of our national security goals and our economic interests. We did not, the president was very clear that he did not want to cause a spike in oil. And so we granted 8 oil exceptions, significant reduction exceptions. All of those countries demonstrated significant reductions in their purchases of Iranian crude that made them eligible for an exception. We are not looking to grant any waivers or exceptions to the import of Iranian crude. In the last cycle, we had to be very careful because, as I said, we had a fairly tight market. The United States increased production by 1.7 million barrels a day during that period. Our exports were at about 1 million. The Saudis were very helpful. Khalid al-Fallah did a terrific job increasing production to ensure a well-supplied oil market. Next year, we foresee a better picture, and then I think that allows us to accelerate our path to zero.
And in terms of the waivers ending in May, what's your expectation today of whether we could see those extended?
Well, I can't preview that specifically. All I can say is that we believe that that certainly when we have a better supplied oil market, then that puts us in a much better climate to accelerate the path to zero.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.